Apple is expected to report 6% after hiking prices 20%. PCE inflation hit a 3-year high. Time to sit out. The whole tape is running one story today. Money is fleeing big tech and hiding in defensive corners. Short-end yields ticked up while long rates slipped. The curve is steepening, pricing in near-term rate hike risk. Apple raised MacBook and iPad prices over 20%, then its stock fell over 6%. Microsoft had its worst June ever, falling over 3% today. Investors are questioning whether massive AI spending will ever pay off. Brent crude gave back all of its war risk premium, falling to pre-conflict levels. Utilities saw the heaviest institutional flow today, the biggest off-exchange volume with a clear buy lean. Healthcare also tilted buy. On the other side, large block trades in tech and financials both lean towards selling. SPY is sitting below its key trigger price, where big banks flip from buying dips to selling them. Right now, they're in sell mode, so every bounce gets pressure from above. QQQ also sits below its key trigger price, same bearish dealer setup as SPY. There was a flood of same-day call buying, but it expired by the close. The biggest options money today piled into Micron, over $2.5 billion in premium, mostly bullish bets riding the earnings beat. Healthcare ETF XLV, bullish, institutional buying confirmed, defensive rotation with real upside momentum. Small cap ETF IWM, bullish, squeeze pressure building, far less exposed to big tech drag. Long bond ETF TLT, bullish, oil falling eases inflation fears short term, yields pulling back. Here's the read. PCE hit a 3-year high. Rate hike risk is real. Dark pool selling is concentrated in tech and financials, while real institutional money moves into healthcare and utilities. Retail is chasing Apple down. Institutions are handing it to them. The market has been drifting lower for a month inside a longer uptrend. This dip has real teeth.
That's today's print. This is Lidar. See what they see. Trade your own thesis. See you next time.